The S&P 500, GSPC, rose percent, or 25.7 points, as of market close to reach 2. This exceeded the index's previous record close of 2, but remains below the index's all-time intraday high of 2. The nasdaq, IXIC, rose percent, or points to a new record closing high of 8. The tech-heavy index's previous closing high was 8, while its all-time intraday high remains at 8,133.3. The Dow, DJI, rose percent, or points, and closed at 26. This is within 1% from the index's all-time record closing high of 26. On the heels of a steep pullback in equity markets at the end of 2018, some analysts remain cautious about the prospects of a near-term continued surge in prices. The economy has been resilient and corporate earnings are coming in better than expected, although still at growth rates that are more indicative of a stable economy, but not an accelerating one, so it's hard to justify valuations at this point, and we would be concerned of another pullback in the next 3 to 6 months, Chris Zaccarelli, Chief Investment Officer for Independent Advisor Alliance, said in an email. However, over the long term, this bull market should be able to sustain any pullbacks and could run for another 1 to 2 years from here, so we remain positive over the longer term, despite our near-term cautiousness, he added. Tuesday's stock market advances came following strong quarterly earnings results before the bell from companies including Twitter, United Technologies and Coca-Cola. Elsewhere, the US dollar index rallied as high as during intraday trading, hitting the highest level since June 2017. Meanwhile, oil prices added to gains from Monday after Secretary of State Mike Pompeo announced that the U.S. will no longer grant sanction exemptions to countries buying oil from Iran. The Trump administration's goal is to bring Iran's oil exports to zero, and earlier reports of the announcement pushed prices higher as investors anticipated a tightening of global oil supplies. U.S. West Texas Intermediate, CL=F, rose as much as 1.5% to $1 per barrel, hitting the highest intraday price since October 31. Prices for the commodity settled at $1 per barrel. Brent crude oil futures, BZ=F, reached as high as $1, or the highest level since early November. Coca-Cola, KO, beat Wall Street's expectations for quarterly results on the top and bottom lines as the company's efforts to pivot to products aside from sugary drinks paid off. Comparative earnings per share totaled 48 cents in the fiscal first quarter on revenue of $1 billion, exceeding expectations for earnings of 46 cents and sales of $1 billion. Case unit volume rose 2% in the first quarter, driven by a 7% increase in unit case volumes in Asia-Pacific region. Within this metric, water, enhanced water and sports drinks grew 6%, while sparkling soft drinks grew 1%. Twitter, TWTR, increased its monetizable daily active users, MDAU, in the March quarter, helping drive better than expected quarterly revenue and profit. The company's MDAU grew 11% year-over-year to 134 million in the fiscal first quarter. Monthly active users, which the company will no longer break out after Tuesday's report, declined by 6 million over last year to 330 million. Adjusted earnings of 37 cents per share on revenue of $787 million topped expectations for earnings of 15 cents per share on sales of $775 million. Verizon Communications, VZ, the parent company of NewsPulse Finance, posted stronger than expected first quarter earnings and raised its earnings forecast for the year, but posted a loss in phone subscribers in the first quarter. Phone subscribers declined by 44,000 in the fiscal first quarter, but total wireless subscriber additions netted an increase by 61,000 as a rise in subscribers for other connected devices offset postpaid phone subscriber losses. Earnings per share of $1 beat consensus expectations by 3 cents, while total operating revenue of $32.1 billion was in line with estimates, according to Bloomberg data. United Technologies, UTX, beat consensus expectations on the top and bottom lines, with adjusted earnings per share coming in 20 cents ahead of estimates at $1 in the first quarter and sales of $18.4 billion exceeding expectations for $1 billion. The company also boosted its 2019 earnings outlook to see adjusted earnings of between $1 and $8 per share, raising the low end of its guidance by 10 cents. As with peer Honeywell, HUN, United Technologies reported strength in its aerospace unit, with the segment posted a 71% year-over-year rise in sales. Procter & Gamble, PG, topped Wall Street's expectations in its fiscal third quarter results as consumers continued to purchase the company's products even after price increases went into effect earlier this fiscal year. P&G's organic revenue rose 5% in the third quarter, with beauty category organic sales up 9%. Net quarterly sales were $1 billion better than the $1 billion expected, while core earnings per share of $1 beat expectations by 3 cents. Emily McCormick is a reporter for News Pulse Finance. Follow her on Twitter, at Emily_MCCK. Follow News Pulse Finance on Twitter, Facebook, Instagram, Flipboard, LinkedIn, and Reddit. Tech companies like LYFT want your money, not your opinion. Levi Strauss shares jump more than 30% above IPO price at open. Facebook sued by Trump administration for alleged discriminatory ad practices. Boeing 737 MAX groundings. Pressure. U.S. economic data. Wells Fargo recession risks remain muted as fear tracks higher. Report.